Maju, how are you?
How are you?
I'm okay, I'm okay. How is everything? How is family? How is work?
Family is good.
How has been trading? How is trading? Are you still in the game?
Yeah.
You're out.
Mm, mm, mm.
How much is your equity now?
Mm.
Huh?
Out there just for something else. I deposit.
Or you don't have an account anymore?
I deposited today.
How much?
130.
Okay. So what is the real problem, Maju? What can you say is the real problem? What's happening?
I don't know. But for that like, but for the past days, I think 75.
Oh, is it?
Mm.
Okay. I hear you. You know, I was talking to Terence in the afternoon. Like I was telling him, like, you guys, you are still in the beginner phase of your journey, right? The most important thing is for you to master how to preserve your equity. As you are trying to learn about the strategies, is good, but as you're trying to learn about the strategies, make sure that you are preserving your capital, because as you're trying to learn, you're going to make mistakes up until you get used to the strategy. So in the beginner phase of things, the most important thing is capital preservation. You have to be able to preserve your capital. Do you understand?
Yes.
So the problem now with the majority of beginners is that you want to skip the process. Why do I say that you want to skip the process? If you check the huge expectations or the huge returns, for example, someone is a beginner, this is their first year in trading, but already they are trying to flip $100 to 1,000 or 100,000 or 10,000 in a space short of time, of which for them to get to that level, they still need to acquire certain skills. So in other words, you're trying to force your growth. You're trying to prematurely force growth, because in reality, you still need to gain that momentum and that consistency in your strategy. And if ever you are not able to preserve capital, no matter how much you know, you always be going up and down. If you don't know how to preserve capital, preserving capital is the first step. Once you can preserve capital, you now need to think of the next thing. How can I now gain profit with this capital that I'm able to preserve? That's where you now move now to your strategies. That's where you now move to risk management. That's where you now move to emotional management, consistency in all of those things. those things, they come later on after you have managed to harness and preserve your capital. Do you understand? Are we together, mind you? So for example, if you check the VIX75 trend, the VIX75, it hasn't been confusing at all, because if you check, we had this level of support here, support, broken, retested. As we enter after the retest, if you used smaller time frames, you could have gotten a smaller stop loss there, a reasonable one. Then your target is this white line that I placed here, which is the most recent low from where the market is this area, right? So that is your target. So entering sales there upon the retest, this is still your target. It means all these days, 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 days of holding at one single trade. 10 days of holding one single trade, open profits close to $90. That is just with the minimum lot size. So when people say this is confusing, most of the times is because you want to join a moving train whereby the market would have already started moving, and you want to join a moving train and you fail to join the moving train. You understand? For example, VIX75 has been selling for the past 10 days. I'm not talking about these days above here. Obviously, these ones are included, but I'm talking about here after the break here, break and retest, which has been selling for the past 10 days continuously. And I'm expecting it to still push further to some of this level here. So VIX75, if you ask me, the analysis has been so clear for these past 10 days. It has been so clear, like it was selling. So for this past 10 days, what you're simply supposed to do is to look for selling opportunities. Look for what? For selling opportunities. So if you check selling opportunities, they were
okay.
Do you understand, Maiju?
Yes.
So if you come to your resistance, this was your resistance trend line here. Broken, retested. That is sort of like a double top. One can take that as a double top. You could have entered it there, or just waited for this other trend line as well. So this is something that is so easy, but people will tend to complicate things by sometimes it's actually our laziness to analyze starting from the daily. Sometimes people, they are so lazy to even do that. They just want to start from the lower time frames and see what is happening. Yet things, they always start from the higher time frames going to the lower time frames. So either you could have entered here at that double top, or you could have also used this trend line and entered immediately after this break. So entering here, your target, your first target is always, you look to the left, what you are looking for. You're looking at the recent lows. First recent low is that one. Second one is this one. So entering there, this recent low broken. After this break, check this next candle, retested this level. So this area as well, it was an entry opportunity for sales. Broke, retested, remained below. So it was an entry opportunity as well. Went to this next level, which is your target number 2. Broke below, came back inside. broke below, came back inside. Here you could have taken profits. You could have taken profits based on that failure to reject here. So the next candle closed below the candle after rejected. So after this rejection, one could have even entered a sell, or you could have waited for the break of this support here, because this market created a support before it continued going down. So that is a support, created support. So here, these cells you could have closed somehow here, and this cells as well could have closed maybe somehow there. Then you wait for the break of this support, or you could have also decided to enter even at the top there, at that top resistance, because that was a resistance, resisted here. Resistance. So either you could have entered there at the top on the resistance. You'd have gotten some sales there, because you know that it's still going down. Either you entered there, that would be a risk entry, obviously, or you enter after the break of this support break, you could have entered or waited for the pullback. So these all were entry points. All these were entry points. Can you see? There. There. There after the break of the support, there on the retest. Our target is still the same. What is our target? Our target is still this area that we marked on the daily, which is this area, right? Break, retest. After that, continued going down. You could have also used the Fibonacci there to get entries on the retest. You would have also used your Fibonacci, point A to point B. Point A there, the top, point B at the bottom. Something like this. Right, something like this. Point A, point B, respected the 61.8. You could have entered entries on the 61.8 there. 61.8, you would have sold, taken sales. And as you know, when we enter on the retracement level, our first target is 0%, came back all the way to the 0. From the 0%, once we break the 0% and retest it, we expect negative 27, negative 61.8. So TP1 is 0%, TP2, and TP3. TP1, TP2, TP3. So TP1 already has been hit. If you check, it was hit. So on the 0%, you can also place another support there, or you can call it a resistance, because the market is now below. So this one now, what we want here, this market closed below, but eventually went back above. Went back above. So here, if you check as well, it also created a resistance as well. If you look at this zone, look at this zone here. That's a resistance. So are you understanding so far what we are saying? Are you understanding?
Yes.
Right. So if you check all the entry points that I'm showing you, these are simple entry points that you would have identified for yourselves. Remember, we're still selling because our target hasn't been reached as yet, and as well as market structure hasn't shifted. When I mean market structure, I'm referring to our lower highs and lower lows. From this high, we have that lower high there, lower low, lower high. So according to market structure, so long market structure hasn't shifted, we are still going down. Lower low, lower high, most probably it's going to form a lower low somewhere around here. So market structure, you could have even marked market structure. For example, here, you're saying this area is your lower high, this area, meaning so long this lower high, so long this lower high level hasn't been broken, my sales are still safe. And so long this, so long it's still below here, sales were safe. So if you check here, it created this lower low. From this lower low came back and created this lower high. That's a new lower high. So you mark again here. From that lower high, so long the market is below this lower high, sales were safe. So long we were below this lower high, sales were safe up until it breaks market structure. That's when you start to look to the buying side of things. But so long market structure is still being maintained, you don't change your bias, you still maintain the bearish bias. So you can also mark this level. One can also call this level the lower high. That is a most reasonable lower high. Lower high from that lower high there, lower low, lower high, this level here. So this lower high, if you check, it wasn't broken as such. The market failed to break above that level. So meaning it's still maintaining our bearish market structure. Went, now it's most probably breaking this recent lower low. Can you see? So if it closes below this support, sales can actually be taken, and the target is still the same, which is our zone, this white line here.
Yes.
So market structure on the higher time frames is the one that is much more important. Smaller time frames, the reason why they are dangerous is because they shift market structure every time. So if ever you're looking at smaller time frames like 15 minute, 30 minute, 1 minute, 5 minute for shifting market structure, they will deceive you because they're always going to shift market structure each and every time. Here you could have also used a trend line. That's a trend line here. First touch, second touch, third touch you enter, fourth touch you enter. Those are entry points. Entry point there, entry point there. So the other entry point is the break of this support. Can you see?
Yeah.
Right. So the break of this support, I would love just a small pullback. I would love a small pullback. Then we enter. Our target is there. I would love just a small pullback to happen. Then we enter. So you can either enter 15 minute, 30 minute. I love 30 minutes most of the times because it's a more stable time frame than the 15 minute. It's much more better than 15 minutes because there's less manipulation there.
Okay.
So this candle, let me see on 15 minutes what's happening. Okay. So we just want the market to close below that support. Once we close below that support, probability of price pushing all the way to our target is high here. So that's the support. Once we close below, we want the next candle to go back to the zone, reject. Once we reject, we enter. Then our target is that white zone.
Yes.
So for stop loss, if you check, this is a $5 stop loss just from here to there. That's a $5 stop loss with a minimum lot size. So you just wait for the next candle. Once it rejects, there you enter. The stop loss, you can just place it anywhere reasonable. If you check, this is a $6 stop loss just from here to here. It's $6 with the minimum lot size. So depending on the lot size that you use, you just choose. So somewhere there it will be safe, or even somewhere just halfway there, above the negative 27%.
Okay.
So we're expecting just the next candle to pull back, reject, then we continue.
Mm.